Hi everyone. This is Rob.
This is Dave.
Eric, if you can hear me, can you just say I can hear you? We're just asking Eric. And if there's more than one Eric, then I guess we'll get two responses. But hey Ray, guess your name is Eric too. All right, great. You can hear us.
All right, fantastic.
We are thrilled that you're here.
Yeah.
Okay. We are going to talk about support and resistance trading today. It's just one method that we've used in the past. It's one method that works really well. It's one of the easiest methods to describe and teach. Every trading method is difficult to become an expert at.
Sure.
And Dave and I always say, if you're going to trade anything in a discretionary fashion, any trading system that gives you wiggle room or decision-making powers or the ability to say yes or no to a trade, that's going to take between 1 and 6 months of absolute focus and practice before you really feel comfortable with it.
Yep.
That's not meant to burst your bubble.
Nope.
Or your buble.
Yeah, that's how you want to say it.
If that's how you want to say it. Let's start off by letting you know that there is a place on the web where you can see support and resistance trades that I plan on a regular basis. So now I'm going to test using the camera, whatchamacallit. So I'm going to show a web page here, and I'm going to try to bring it up. I have a long history of getting waxed by hot comp, so excuse us if this doesn't work.
No waxing, please.
No waxing, please. I'm going to click on here, and then I'm going to click again. Let me click this again. I'm going to do it right, I promise. Promise I'm going to try to do this right. Here we go. All right, this should show a picture of the FX Street blog that I do. It's free. Welcome you to stop by.
It's a great blog.
Dave, this is where, hi Eddie, this is where we talk about support and resistance trades. For example, on November 8th, 2007, here was an entry. It's called Try an Earthquake Trade from the 60-minute chart. And I usually put in pictures of like Dairy Queen or movies or other weird stuff. And I describe some type of support and resistance trade that I'm looking at. I update this. I try to update this 2 to 5 times a week. And I update it with a few trades as often as I can. I also sometimes put my note card trade plan in there, and if we have some time, we'll talk about that near the end.
Those are very helpful.
But I talk about, Dave, I just talk about support and resistance trades that haven't happened yet.
Yep.
And then when they do happen, we talk about them and tell you what happened.
Yeah.
And there's lots of entries here. There's Alice in Wonderland. They're all support and resistance trades. That's Frankie Avalon from the movie Grease. I invite you to stop by that blog. That's postcards.fxstreet.com. Remember, there's nothing for sale here. It's just a blog where I talk about support and resistance trades, and you can follow along. Boyke mentions practice makes perfect, Dave.
I agree with that, but I have a corollary to that.
What do you usually say?
Perfect practice makes perfect.
That is so brilliant.
If you practice making stupid mistakes, you're going to make them still.
And if you practice over and over and over again,
well, those mistakes will be ingrained into your brain.
So you want to really practice good trades.
Yeah.
And you want to practice. And we're going to talk about that near the end.
Yeah, we're going to do a lot of that.
In about 40 minutes, actually less, in about 36 minutes, we're going to talk about how we do our testing and our practice.
And I'm dying with anticipation to show you that.
We can't wait to show you. Now,
fantastic.
Enough of all that mumbo jumbo. We're going to dive right into the charts. We strongly encourage you to do the following. Ask us questions. You can type in your questions right in HotCom, and we would love to answer those questions. So please, as we move along here, we invite you to ask questions. What kind of questions can people ask, Dave?
Sensible questions.
Great. You can ask us anything you want to.
Yeah.
And nonsense is always better. Ask us what to ask laughing out loud. That's exactly right. All right, now I'm going to switch over to a different screen And forgive us if anything goes wrong. We apologize, but we're planning on it working out perfectly. It will just take one moment for us to bring up the new set of charts. So, here we go. What's the address of the blog, asks Dark Monk. Let me type it in right here. postcardsfxstreet.com. That's the address of the blog. We would love for you to stop by. And don't forget to subscribe to it using FeedBurner. It doesn't burn you.
Yeah, not at all. You won't be singed. You'll be safe.
Okay.
But you'll get the blog.
Here we go, Dave. We're going to try to share something on HotCom.
Let's share away. No waxing, no waxing.
Ta-da! That should show you all a picture of my chart. It should show you a picture of and we'll type in what we're looking at. This is the USD CHF, and it is the 1 hour chart. When we look at support and resistance, we often plan trades using what we call channels. We didn't invent channels. We're not trying to take credit for inventing support and resistance.
But we use channels.
But we use them.
And how we use them may be unique.
In the same way that we use the telephone.
Yeah.
But we didn't invent it.
That's correct.
Okay. This is a picture of the 1 hour chart for the US dollar Swiss franc. What I did here to draw the channel, and I'm going to erase it, and I'm going to redraw it from scratch. What I did was I looked at these places where the currency pair seemed to pause on the way up.
Right.
And I simply drew a trend line across the tops of those candles. Now, Dave, do I have to draw it in exactly one specific place? Think about your answer. Don't let me rush you.
Is this a trick question?
This is a trick question, yes.
The answer is no.
The answer is no. It doesn't. There's not one particular, only, super best, single most important spot to draw this.
Nope.
So I'm going to just draw the trend line across the tops here like so. Question, Dave?
Yes?
Can I draw a parallel line below that's parallel to the other line?
Maybe yes.
Maybe yes. So I'm going to just draw that right there. And boom, shakalaka, we end up with a chart that shows two parallel blue lines that are solid blue lines.
Would that be a channel?
That would be a channel. Now, here's what we want to talk about next.
Right.
For those of you that this is review for, we apologize. Feel free to turn on the television set and do something else while we're talking. Right in the middle of the channel here, Dave, there are these funky blue dotted lines.
Yes, I see them.
What are those called? What are those?
Those could be called fibbles.
Whoops.
Fibbles.
Fibbles are levels which are fib retracements. So we call them fibbles.
Uh-huh.
Max named them. He gave them that name.
Max is brilliant.
Max is brilliant. All right. Look at these fibbles. These three dotted lines that are blue in the middle of the channel are fib retracements of the channel itself. There's one at 38%, one at 50%, and one at 62%. It simply shows us the midpoint of the channel. And price tends to congregate or get stuck in those middle areas.
It's like the foyer at church.
It's like the meaty section of a sandwich.
Oh. Now I'm thinking food.
And the channel tops and bottoms are like the bread.
Yeah.
Okay, let's talk about the first trade type that can come with a channel. Trade type number one, lots of you don't have these fibble lines in your charting software. Sorry. I'm not trying to sell any software today.
No.
But we use XTick, and XTick draws them nicely.
Very nicely.
First trade type. Trade type number one is a sell if a currency pair closes below the bottom of a rising channel. Just like right here.
Mm-hmm.
That would be a sell trade.
Yeah.
And we would stop out if it closed right back inside the channel, which did happen right here.
There it is.
There it is. That's the end of that trade outside the channel.
Se acabó.
Usually, our profit targets would come at these red dashed lines below the channel. What are those called? Those, my friends, are called Winnipeg lines. These Winnipeg lines are named after Winnipeg, Canada.
Quebec City.
Which is a city.
Yeah.
They are fib extensions of the outside of the channel. If you look at the chart right now, if you look at what I'm doing right now, I can choose levels, and I can actually post levels. See, level 5 is -1, level 6 is -236, level 7 is -0.382, and so on. These are extensions of the outside of the channel. So if the channel is 100 pips wide, 23% retracement outside the channel, or extension outside the channel, is 123 pips.
Got it.
Because the channel was 100. It's just extensions of the channel itself. And these are excellent profit targets of a break or a close outside the channel. That's trade type number 1.
All right.
In a rising channel, if the currency pair closes outside the bottom of the channel, and then we sell it, and then it closes back inside the channel and we stop out, we could also buy the currency pair at that point.
Ooh.
So we could buy the currency pair on this candle, Dave, that closed back inside the channel. I'm going to make the chart bigger.
Mm-hmm.
That entry would be at 12.54.
Okay.
The stop loss would go below the bottom of the channel, 10 pips below the bottom of the channel.
Okay.
And the first profit target is the first fibble, which is up here at about, let's say 12.75. And that's a buy trade. We want to buy it if it's trying to rise back up inside the channel. That's just a simple type of sell trade and a simple type of buy trade that we take in channels. This type of system for using channels and support and resistance works with short-term and long-term charts. I like to focus in these webinars at FX Street on the longer-term charts, just because there's so much short-term trading going on out there, and it's a nice change from what a lot of people are focusing on.
Yeah.
What kind of things happen, Dave, when people are ultra-focused on the short-term charts?
What kind of things they can go through, like being whipsawed?
Yeah, whipsawed or just emotions.
Yeah, you can have emotions.
Overtrading.
Overtrading, definitely.
What's overtrading?
Trading far too much.
Making, 5 or 10 or 15 or 20 or 30 trades in a day.
Yeah, that's a lot.
Yeah, that's being addicted to trading. So those are fibble lines, and those are Winnipeg lines. You can sell below the bottom of a rising channel and trade to the Winnipeg lines, or you could buy at the bottom of a rising channel and trade to the fibble line. Let's take a look at the Australian dollar, US dollar. This is a trade type or a trade example that's sort of an example right out of the book Adventures of a Currency Trader. It's kind of what Harry Baines did.
Cool.
If you'll notice back here on the daily chart, no, this is the 4-hour chart for the Australian dollar. Let me type that out here so we can all see that. Oh, sorry everyone. 4-hour chart. Okay. Someone asked if we can talk about how many trades would be too many on a short-term trader, and we'll answer that question a little bit later. Here's the 4-hour chart for the Australian dollar, US dollar. And as you can see back here on around the 20th, 21st, and 22nd of October, the Australian dollar fell and hit this low of 87.49. Now, once a long-term chart that says the top is cut off, so I'm going to try to reshare this chart all over again. Okay. It fell to a low of 87.49, and we're going to look for the currency pair to fall and hit that level all over again. Right. And as soon as it hits that level, immediately when it hits that level, we would be willing to buy the currency pair.
Great.
Let's look at an example of this. So here's a more current example of the Australian dollar, US dollar, and we'll move the chart forward a bit. And as you can see right here on the 12th of November, the currency pair fell and hit a low of 87.52, which is close enough.
Yeah. And
it pops back up and rises up off of that level. Here's what we could do. We could put a buy trade at 87.49 bid. That's the price that's being shown on the chart.
Right.
A stop loss 20 pips below this support level that we saw, and we can have a number of different methods for a profit target. Let's go over a few different methods that we like to use. Method number one, we like to use previous levels of support or resistance. So this high up here at 93.32 would be an optimal level. That's an area of resistance that we reached before. We could also use a fib retracement. So we would draw a fib retracement level based on the move, and we could target all these different levels. Let's change some of these colors here on these levels. Having some trouble with that. Oh, text color, white. There we go. First profit target that we could shoot for was 89.04. Next profit target that we could shoot for would be 89.98. Next profit target could be the 50% retracement at 9,074. And then we could even get up to the 62% retracement at 91.51.
Question.
Yes.
Would you, with all those profit targets, just move your stop loss to break even? Are you trading more than one lot?
I generally don't like to move the stop loss to break even until I'm profitable by at least 50 to 100 points.
Right.
Or that first fib level is reached. Guido asks a very intelligent question. Why 20 pips of a stop loss? And the answer is because that has tested well, and also because it has an incredibly tight stop. You're talking about getting in at 87.50 with a stop loss at 87.30 and profit targets that are 300 plus pips higher. That's just a good risk to reward ratio.
Yeah.
And we'll talk about risk management a little bit later, but this is one methodology. I want to look at something else here, Dave. I want to look not just at a trade that would already be open, but on, let's try this again. Let's remove some of these things that we've done. There we go. And let's look at the 4-hour chart all over again. And let's say that the currency pair rises back up to 9,400. Let's say that happens in 1 month from now. If it rises up to that level, I'm totally willing to sell it immediately with a 20 pip stop loss and a profit target of, let's just use a fib retracement level. That was a support and resistance box. It's beautiful, but it's not what I want to do.
No.
Let's use the correct tool now. So let's say it fills up that space and rises up to that level. The first profit target would be the 23% retracement at 92.43. That would be 160 pips lower. And we would really be shooting to get down to the 89.98 level, about 400 pips lower. That 62% retracement is one of my favorites.
Yeah. And that's a fantastic risk-to-reward ratio.
Yeah. So even if that stops out, you might have, on trades like this, you might have 10 losses in a row of 20 pips each, and you might have one winner afterwards of 300 or 400 points.
Well worth it.
We'll talk about testing this later and how you can become totally satisfied and accomplished as a support and resistance trader in this particular method. Let's move on now and look at the pound dollar. This is the pound dollar weekly chart, but we want to switch over to the daily chart. Right here, this is another technique that I use with support and resistance trading. It's a very common method, and it's described in great detail in lots of different books, including Edwards and McGee's book, technical analysis of stock trends. We might take a look at that at the end of this webinar, and you can see what that book looks like. What I've simply done here is taken point number 1, point number 2, and I've drawn a trend line underneath those candles. Now, it can be this is a daily chart, by the way, of the British pound US dollar. Let me make sure I note that on the chart. What we can do, Dave, could I move the chart so we can see it? Yes, let me redo that again. You should be able to see the chart now. Again, links, tips, you can let me know if you can see the chart now. Can you see the full chart now? Links, tips is right on. Great. We'll make sure we re-show the chart every time we switch pairs. Okay, so we're on the daily chart, and the currency pair has been making higher lows, and we simply drew a trend line underneath those. Let's say, Dave, that the currency pair closes below that trend line. Okay. On the daily chart. The daily. It might take a few days or a week even for that to happen. Sure. We could sell it. Okay. Let's talk about profit targets that we could use. Here are several different methods that we could use. Method numero uno. We could draw another trend line across previous lows. What in the world was that? Another trend line across previous lows.
The subspace anomaly.
The subspace quadratic equation anomaly. All right, trend properties. We're going to extend this. We're going to change this to blue. We're going to extend that out. And that could be another trend line that we use as a profit target. Right. Pretty cool, huh?
That is way cool.
We could also use a low that we started the trend line at as a profit target. So an entry down at like 2.0650. I don't know where it's going to close below that red trend line.
Sure.
A first profit target of the blue trend line. And the next profit target of this horizontal line. That's about 1,000 pips lower. So that's a really, really longer term trade.
Yeah.
We could also switch to the weekly chart, Dave, and we could draw a trend line on the weekly chart. We could just take a previous low right here, draw it across here, and then we could, let's make this trend line black. Let's make the width 1. And let's extend it all the way to the right. And we can use this third trend line as a profit target on the trade. So you can use trend lines as profit targets, previous levels of horizontal support and resistance as profit targets.
And trend lines from the higher time frame.
Trend lines from the higher time frames. Dave, could we also, using what we just did a moment ago on the Australian dollar chart, could we plan a sell trade at 2.1172?
Yes, we could.
With a stop loss maybe at, let's go above that round number, 2.1205.
That would be good.
Excellent. And a profit target of Fibonacci retracements, right?
Sure.
Just like we were talking about. And we could use, let's say, for instance, Fibonacci retracement right here. And the first profit target at 2.0804, second profit target at 0.584, and so on. That's just another methodology for trading this currency pair in the longer time frame. You can see how you can take a sell trade up there at a previous level of resistance, even though we don't know that it's going to rise up there even.
Sure.
It might not ever rise up there again. It might not come back there for 20 years. But it might rise up there next week. I mean, the market's been pretty crazy lately.
Sure. And not only that, Rob, that's a pretty looking chart. I mean, aesthetically, it looks very nice.
I think it would look nicer if we put a picture of a bear on it. A cute little bear. Okay, that's the British pound US dollar. Make sure if you have any questions, you go ahead and ask those questions to us.
Ask away.
We'd be happy to answer them. That's the pound dollar. Let's take a look at the New Zealand dollar, Japanese yen. New Zealand dollar, Japanese yen, blank chart, blank slate. We got the world is our oyster. What I do when I approach a chart from scratch is I first want to see if I can draw some of those horizontal support and resistance areas. And it looks like we have a long-term, or not a long-term, but we have a low right there. This is the, oh yeah, that's right, we got to switch the chart to correct it.
Thank you for reminding us.
So we've just switched the chart, so you should be able to see it now. There's a low, and Dave, here's a high.
Yeah.
So that's a channel that this currency pair is trading in. That's just a horizontal channel. This is the New Zealand dollar, Japanese yen, 15-minute chart. Okay, but on the 15-minute chart, we could draw a channel here, couldn't we?
Yeah.
Let's see if we can get a channel drawn. I don't know if, I'm not looking at any perfect channels. Maybe draw it across the highs here.
Sure.
And then we would need a parallel line down here. Where are we going to get a parallel line? I can only choose a parallel line maybe at this low right over here, but I don't have 2 points on the bottom of the channel.
Yeah.
I'd prefer 2 points on the bottom of the channel that show me at least 2 points on the top and 2 points on the bottom. Now, I can draw this. It's perfectly acceptable to draw this. And it can give me a spot, which is over here. It gives me a spot that I could that I can possibly predict if it falls to this level, it's going to stop.
Sure.
And if it falls to this level and stops, we could have a bottom of the channel going on.
Yeah.
And we could buy it at the bottom of this channel and ride it up to the first fibble. For instance, we could watch it fall to the bottom of the channel and create for us a reversal candle. What kind of candles, Dave, are reversal candles?
Like a doji.
Or a hammer. Right, those types of things.
Fairy.
A pregnant fairy, the angry boss, the 8-legged spider candle.
Those I like.
Those I like. We're just making stuff up now.
Yeah.
You could look for a reversal pattern, and if you've read anything by Steve Nissen on candles, or you've done any work with people like the James 16 group on price action, you could read for a reversal or a price action going the other way, bullish engulfing, those types of things, and buy it immediately at the bottom of the channel based on that price action, and ride it up to the first fibble. The stop loss, once again, would go 10 to 20 pips below the bottom of that channel. Here's the other trade that we would consider taking. We consider selling this pair on a close below the bottom of that channel.
Yeah.
And we'd ride it to the first, second, third, or fourth fibble lines.
Right. Or, as better mentioned, Winnipeg lines.
Those Winnipeg lines. Thank you for correcting me. I appreciate that.
I know it's easy.
So now it's 12:30, and 12:30 is a great time of day, Eastern time, to look at the Euro Swiss. This is the Euro Swiss franc. It is the daily chart. So here you go. It's a beautiful daily chart. And Dave,
yes,
darn it, I've missed the trade. Look at this awesome sell trade I could have taken on the daily chart. I guess it's all over. I guess there's no chance for me to take any trades at all. But wait, there's more. What if, Dave, we drew a line along the bottom or the place where the currency pair... Oh, sorry, everyone. What if we drew a line below the bottom where the currency pair most recently fell to and reversed?
What if, Rob?
Could we drop down to a lower time frame now and maybe trade a sell trade if it closes below that level?
We might be able to.
Sounds totally different. Here's the re-entry method. If you have planned a trade to go short on a currency pair below a trend line, or long, but in this case we're just talking about short trade, and it falls and hits a level and bounces off that level, just like the Euro Swiss is doing right now.
Yep.
We could draw a line underneath that level, drop down to another time frame lower, and sell it on a close below that level. That would be like a re-entry or a reinitiation of the downward movement that we saw before.
Beautiful.
Beautiful. Profit target on this, we've got many, many different options. One is we can use this line right down here I'm going to change the color so we can see it a little better. We can use this line down here at 61.78. That's the previous low.
Mm-hmm.
We could also use fib retracement. And we could go down to the 76% level at 63.30.
Right.
And then down to the 100% retracement at 61.74.
Which coincides with the blue dotted line. That's wonderful.
Because it's the 100% retracement.
100%.
Dave, could we buy at 61.74 with a 20 pip stop loss and a profit target of something of a fib level back above?
Maybe yes.
Absolutely yes. Strat asks a really good question. If we drop down to a lower time frame and we're going to take this trade on the lower time frame, what would we drop down? I usually drop down 3 to 5 times lower. So if I'm on the daily chart, I go to the obvious choice, the 4-hour chart. If I'm on the 1-hour chart, I drop down to the 15-minute chart. If I'm on the 15-minute chart, I would drop down to the 5-minute chart. If I'm on the 5-minute chart, I'd drop down to the 1-minute chart. If I'm on the 1-minute chart, I'd drop down to the 25-second chart. If I'm on the 25-second chart, I'd drop down to the 5-second chart.
I love that 5-second chart. It just moves so quickly.
We don't actually look at that.
No.
But that's an example of if we're planning this re-entry of the sell trade on the daily chart, we would drop down 4 time frames to 5 time frames to 6 time frames at the most lower.
Yeah.
And in this case, we go down to the 4-hour chart, which is
and these are the
6
standard time frames that you always see on the charts.
Yeah, these are standard time frame charts that you can see used all the time. That's the Euro Swiss. Let's take a look at the Euro Pound. I'm now going to switch over to the Euro Pound, and I have shown you the chart. This time I did not switch over without showing you the chart. And this is the 8-hour chart. Why the 8-hour chart? Just to show you that we can use any time frame. There's not a restriction on what time frame chart you use. You could use the 3-hour time frame, the 333-minute, the 233-minute, the whatever. Whatever you want to use, you can use. If you can open up the Euro Pound to an 8-hour chart, we'll take a look at that. I have to get something to drink or I'm going to faint. Oh, so I'll be right back after like 2 seconds. So Dave, you can regale them with stories of your childhood.
Well, most of you guys knew that Rob and I grew up together. If you don't know that, we did. But I'm not going to tell you any stories. Because frankly, I can't remember anything. Hey Rob, can you bring over some chips and salsa too?
All right, here we are in the pound yen, pound euro, euro pound, whatever it is. 8-hour chart. Here's the channel I'm looking at right now. Some people ask me, do I buy above the top of a rising channel? And the answer is no. And the reason I don't buy above the top of a rising channel is I found that it's like running uphill. If a currency pair breaks outside of a rising channel, that's like running uphill, and it could be very, very tired.
Yeah.
It could need to slow down. It could need a rest.
Yep.
And so we don't want to sort of buy it at the point of exhaustion. We'd rather buy it all the way down at the bottom of the channel. Now, when you're looking at an 8-hour chart or a 4-hour chart or a daily chart, it takes a long time for a currency pair to get all the way down to the bottom of the chart. Dave, this isn't going to happen overnight.
Not overnight, nope.
It's not even going to happen today. There's no chance it's going to happen today.
Nope.
It might not be until next week, but eventually it is going to fall to the bottom of this channel.
Yeah. And
that's when we want to think about buying this currency pair at a low point on a reversal candle. Dave, what are some of the reversal candles we can look at?
Bullish engulfing, Pregnant Fairy, Angry Boss,
the universal remote.
That's one of my favorites.
That just looks like a big square. No wicks.
Yeah.
We could also sell this currency pair if it closes below the bottom of this channel.
Right.
What about selling it right now?
Not. No.
It's at the top of a rising channel.
Yeah.
It's not a good place to sell it.
Nope.
Now, the reason for that is any of your profit targets would be rising up to meet you. And that would mean the profit target would be getting reduced and reduced and reduced and reduced. And if your stop loss is above the top of the channel, your stop loss is going to go farther and farther and farther away.
Right.
And we don't want to do that. A rising channel is indicative of a rising trend. And we don't want to sell in a bullish trend necessarily. Necessarily.
Yeah.
Meaning, I mean, if you've tested something else that works, then, you know, praise be you. We don't care. All right. I would like to tell you about the pig from the blog. Somebody asked that. Dave and I did a video the other day.
Yeah.
And there's a pig in the blog. Why is there a pig in the blog?
It's a handsome pig. I like him.
Some pig. That's just, we're testing out our chroma key green screen.
Yeah.
And we took the first image we had, which was of a pig. Gonzalo asks us a spectacular question. Do we redraw a new channel once we get a breakout? And the answer to that is, very often, yeah, I will redraw the channel. And let's look at that right now. I'm going to switch charts. You should be able to see the new chart now. This is the dollar Swiss again. This is the 1 hour chart. And Gonzalo, you can see right here that the currency pair broke out of, Boyke wants us to show a pregnant fairy. Yeah, we'll show you one of those. I'll write that down. We'll do that later. All right. Gonzalo, we can definitely redraw the channel. We've had a breakout. It didn't work. That trade failed.
Yep.
So we could redraw this channel. Let's see now. I'm going to remove this channel, and we could try to redraw it. We could draw it across this low to this low, and across these highs still the same.
Yep.
And that could be our new channel. So if we're in that buy trade we talked about earlier, you'd stay in it for the fibble in the other chart.
Sure.
But if you wanted to replan a sell trade, you could replan a new sell trade based on the new channel that we're looking at right now.
Right.
Does that make sense?
Perfect sense.
All right, let's look at an example of a pregnant fairy candle. There we go. That's what I call a pregnant fairy.
Nice wings.
It also looks like a Chinese finger trap.
Mm-hmm.
The wicks are like the fingers, and they're sticking inside of that finger trap thing, and their fingers get stuck.
Oh, I did that one time.
Max called it a Chinese finger trap candle. It has no significance to me whatsoever.
No.
Like I said, people like Steve Nissen, he's an expert in candlestick patterns, and he's really the go-to guy for that kind of thing. But otherwise. Who gave these names? Oh, we all did. We made them up.
Yep.
We make up names like this all the time. Okay, if I could ask, in about 5 minutes, we're going to move on and talk about testing, and we're also going to talk about risk management.
Great.
If I could ask you, all of you out there, and there looks to be, 40 or 50 of you out there, I'd love to ask you to name for us a currency pair that you want to look at. So any currency pair you'd like to look at, we'd like to take a look at. So type some of those in, and Dave, you can tell us if the pig has somehow related to Pink Floyd. So give us some, and we'll look those up in just 2 minutes.
The pink is not related to Pink Floyd. Although Pink Floyd did have a pig, I think, as one of their little showtime thingy-majigs. But it's not the same pig. This was a prize-winning pig. They won a prize at the county fair. Has a ribbon and everything. But, anyway, that's enough about the pig.
All right, RS Trader, you asked for the dollar CAD, and you get it. Let's switch over to the dollar CAD. Just take me a moment. The chart does not show up properly. Oh no, the loony! That's what someone said. That's what Frederick said. Hey, Frederick.
Hi, Frederick.
Good to see you. All right, let's look at the 240 chart first. We're going to look at some longer-term things. All right, Dave, I would be willing to buy it if it falls down and hits the 90.55 mark.
All right.
20 pip stop loss. We'll talk about testing in a minute.
Uh-huh.
Profit target would be fib retracement levels that we don't have right now because we don't know where the top is.
Correct.
Let's look at the daily chart. Boy, this currency pair has been in a wild downtrend.
Wild and crazy.
That is just a savage downtrend.
Look at that.
Holy majoli. That is a huge downtrend. All right, here's a trend line that we have based on the daily chart. I'm going to extend this all the way out. I think this currency pair is trying to reach up and hit that trend line. What do you say, Dave?
Yeah, I think it could be.
So what I might do is I might draw a horizontal line. This is based on that re-entry rule that we were talking about earlier. And I drop down here to the 240-minute chart, buy it on a close above 97.23, and target the red trend line from the daily chart.
Why a close and not a break?
I don't know. Do a break if you want. It's whatever you tested, right?
I guess so.
Yeah. Both are good. I like closes. All right. Pound yen. Somebody would like us to look at the pound yen. Why, we'd be happy to look at the pound yen. I'm going to show the chart again, so you should now be able to see the pound yen. We'll start off with the daily chart. We've got a nice symmetrical movement here along these tops. And looks like it already broke out below the bottom.
Yeah.
I mean, that's not really a channel, though, so we're going to dump this. Let's look here. Might draw a channel going the opposite way, downwards, actually. This is a tough one, folks.
Yep.
Long-term support and resistance looks like we've got a top up here, and I know this top really well, 251.03, and a low at 219.30. Let's talk about a few things here. I'll tell you some things that I do.
It almost looks like a head and shoulders.
Head and shoulders above the rest. My chart's freaking out, so apologize. Dave, if it rises up to 251.03, I think I'd be willing to sell it.
Oh, to sell, yeah.
Yeah. Sell it immediately with that 25 pip stop loss maybe for the pound yen.
Right.
Buy it at 219.30. If this one closes below 219.30, that could be a big that could be a big move down. That could be a big move downwards to even as low as 200. So we have 3 minutes left. We have 3 minutes left. I thought we might have a little bit longer. So if it falls to those levels, that might be worth buying it at that level. And if it's a close below 219.30, that might be worth selling it down to 200 with a stop loss of between 20 and 50 pips.
Yeah,
just like we talked about before. Doesn't look like we're going to get to talk about testing and risk management. So we're going to have to be invited back to do those things.
All right.
We invite you to contact us. Here's how you get in touch with us. Here's the blog, free blog. That's my blog on my website. Postcards.fx. What in the world is going on here? Hotcom is freaking out. fxstreet.com. Whoops. Postcards.fxstreet.com. Here's my email address. Here's Dave's email address. And here's Max's email address. If you have questions about what we talked about today, Max is really good at support and resistance. Good friend, good trader. One word about risk management before we go.
Don't risk too much.
Okay, that's like 5 words, but that'll do. Don't risk too much. Dave and I generally remind people, please don't risk more than 1% per trade. We have seen many traders in the past blow up their accounts risking way too much per trade. Yeah. And we would strongly encourage you, please, even if you consider yourself a successful trader, please keep your risk down. Don't ever do anything that would risk losing your entire account or any significant portion of your account. Thank you very much for joining us. We hope to come back really soon. Sorry that we thought we had a few more minutes and we didn't. Maud and everyone from FX Street, thank you so much for inviting us. and we hope to hear from you soon. Oh yeah, that forum! I have that 5-minute, that note card.
The note card trade plan forum.
That's an awesome forum. I love posting there. Thanks everyone for contributing to that as well. We look forward to hearing from you about your own note card trading plan.
Fantastic.
This is Rob.
And this is Dave.
See you later, everyone.
Bye-bye.